The crypto bull market is back, and the market is looking really strong right now. We've beaten the market by a large margin over the past 6 months, and in this video, we're going to share our winning strategy with you. If your portfolio has taken a hit over the past year, or if you've previously made an investment in a coin after seeing some good news and then watched it plummet in value right after, then you're probably a little gun-shy right now. You're not alone. This is all quite common, and we see it happening to a lot of folks that we talk to. What you've experienced is a very common phenomenon in new and unregulated markets. It's a concept known as information asymmetry. And there are two sides to this concept. There are people on one side who benefit from this, and there are people on the other side who lose from it. In general, most people lose from it because they don't have the experience or the tools they need to get over to the other side. We've been able to beat the market because we figured out how to be on the winning side of this phenomenon. In this video, we will show you how to properly evaluate any crypto project and teach you how to break down these barriers of information asymmetry and level the playing field. My name is Han Kao, and I'm the CEO founder of Crypto Briefing. We are one of the most reputable crypto media and research companies in the blockchain space. Our content and research appear in Bloomberg Terminal, Nasdaq.com, Binance, Blockfolio, Delta app, and many other crypto platforms on the market today. We have published over 2,000 articles and over 100 research reports. In this video, you will learn how we think about crypto investments, our core strategy, the 7 tenets of our evaluation framework, how we grade projects, and ultimately, how we pick the winners. By the end of this video, you should have everything you need to be able to pick out winning crypto investments. We'll also share with you a sneak peek of a new research product we've been working really hard on and we're very excited about. Now, before I get started, I want to give you a brief introduction on who we are and why we do what we do. My co-founder, John Rice, and myself met in a Telegram group in August of 2017. We were both extremely frustrated with the way many big crypto media sites were masking sponsored and paid content as real news. 1 month later, we founded Crypto Briefing and published our very first article. We promised our readers we would never compromise the credibility of our content and research, and that we would never accept money, coins, or any other type of compensation in exchange for publishing content. And then we brought on some of the brightest, smartest experts in the crypto field and dedicated the next year to producing unbiased, unpaid, and unsponsored research reports. We then gave all this away for free. We did this because we wanted investors to know the truth. 1 year later, in September 2018, we raised a round of venture capital funding from some of the largest, most prominent blockchain venture funds in the world. Our investment round included investors like DHVC, a $500 million VC fund based in Silicon Valley, Fenbushi Capital, the very first and most famous blockchain venture fund in China, UB Capital, founded by one of the largest Bitcoin mining groups in the world, NGC, one of the most active crypto funds of 2018 based out of Singapore. So how do we pick out winning investments, and how do we leverage this concept of information asymmetry? Information asymmetry is the idea that one party in a transaction has more or better information than the other. The lack of regulation and standardization of industry terms can cause investors to compare apples to oranges. And oftentimes, the more immature a market is, the less efficient it is, and the greater the information asymmetry. With crypto, we see examples of this everywhere, and we see the same patterns over and over again. We've seen crypto projects utilize bots and wash trading to generate fake volume. This creates an illusion that there's excitement, adoption, and liquidity for a project. We've also seen prices of coins jump right before a major announcement. This indicates that project team members are sharing information with their inner circles and allowing these insiders to profit at the expense of others. We've also seen projects publicize major partnerships, insinuating mass adoption of their public chain when these projects are based on private chain solutions that have no bearing on the value of the token. And of course, as I mentioned before, there's no shortage of paid crypto news articles promoting partnerships and upcoming catalysts that simply don't exist. Independently, most of these things seem small and insignificant, but if you add up all these individual findings, you pull them together, and you evaluate the entire project using a professional evaluation framework, then you'll end up with a very different investment story than the one you first started with. The fact is, deep research and analysis done on a professional level can help you identify when and where information is missing, incomplete, or simply untrue, and help rectify this misalignment. This right here is the core of our evaluation strategy. This is where we find opportunities for big profits. This is also how you avoid making bad investment decisions. Now, before I start, I want you to do me a small favor and keep an open mind for the rest of this video. I want you to put aside any critical thoughts like, I know this already, or I disagree, because I promise you, by the time you're done with this video, you will not look at any project in the same way again. So do try and get through the whole video. We always begin our research process with the end goal in mind. Ultimately, our end goal here is to determine if a particular coin is investable. And since we're looking at things from a long-term perspective, we need to figure out if the coin and the overall project has a future. We need to figure out what the coin's prospects are in terms of value and value generation. And we want to make sure that there's a healthy relationship between the overall project and the coin. In other words, is this coin designed in a way such that it is able to capture the value created by the efforts of the overall project? Because, as I mentioned earlier, we often see the press and members of the community focus on positive developments of a project that have absolutely no bearing on the absolute value of the actual coin that investors are buying. The overall idea here is that we're looking at the long-term prospects of the project and how that will impact the medium and long-term value of the token. And as important as it is to determine the prospects of the project, we also want to keep an eye out for all the factors that address the risks of the project. In the end, it comes down to basic economics, supply and demand. All things equal, if the supply of any given asset increases, then the price will eventually go down. If the demand increases, then the price of any given asset should eventually move up. Finally, the most important thing to always keep in mind throughout the entire process is that we never look at any one component of a project in a vacuum. We always look at them in the context of a bigger picture. We'll touch more upon that as we move through the rest of our evaluation process. Now that we know what our goals are, we need to identify a coin that piques our interest. What exactly it is that piques our interest doesn't really matter for now. In the end, it's just an excuse to spend a little bit more time doing a deeper dive into the project. Maybe you heard about it from a friend, or maybe you read an article about it, or it's operating in a vertical that you're passionate about. We do have our own way of narrowing down which types of projects we want to focus on, and I'll get into that a little later. Now, once we do decide on a coin, we want to start with a broad, high-level overview. We start by taking a look at the documentation from the project and see what they are saying about themselves. And then we take a look at what other people are saying about them. At this point, this is mostly desk research. Reading the white paper, browsing the website, taking a quick glance at their GitHub, company Medium, and blog accounts and social media. Again, this is just a high-level overview. From here, we formulate a first impression. And then we dig in and begin evaluating the project according to the 7 tenets of our evaluation framework. The first tenet is the market opportunity. With me today is Ilya Abugov, Crypto Briefing's head of research. Ilya has a master's in economics, a background in computer science. He's worked at companies around the globe developing predictive quant and behavioral models, and he brings all of this into the research we do at Crypto Briefing. Ilya, can you share a little bit about how we evaluate a project's market opportunity?
So market opportunity is the first component of our framework, and here we're trying to address the question of what, as in what problem the project is solving in the market. We're looking for a real problem and a real solution dynamic. There are projects that are sort of fabricating a solution for a problem for a solution. We're trying to avoid situations where, projects are saying that anything can be put on a blockchain, anything can be tokenized. We're looking for a real existing market need and then a solution that really utilizes blockchain as a real tool. And then once we find that particular dynamic, we try to evaluate the size of the addressable market. At the end of the day, we're still talking about supply and demand dynamics. So we're trying to see how big the potential market is, because that's what's going to drive demand. We're trying to see, in medium, long-term future, what the potential user base is, what the potential, velocity will be given this addressable market. And then we also try to see the competition, right? Both traditional and blockchain based, because blockchain is a tool. So we try to see the business in the context of businesses as a whole, not just the vacuum of the blockchain industry. So we try to see, how does the project compete against its, its similar projects in the blockchain space, but also projects in the traditional industry. So for example, if we're talking about social media project, which that says it's going to try and displace Facebook, we try to look at it in the context of, Google spent millions of dollars to try and do the same with Google Plus and failed. Is this new blockchain project going to come in and do something different in reality to really change that dynamic? So ultimately, we're looking for a project with a real problem-solution dynamic, a project that has a sizable addressable market, and a real opportunity to take a real sizable share of that addressable market.
So as Ilya explained, we assess the market opportunity to understand what it is that the project is trying to accomplish. Once we understand the what, then we need to dig into the second tenet of our evaluation framework, the technology. This is the how. How will the project solve the problem they propose? And from here, we'll go to Crypto Briefing's technical expert and chief code reviewer. Andre Cronje is a blockchain developer and has been a technical architect for 2 decades. He was the CTO of a digital banking division of ShopRite, the largest retailer in Africa. He's published multiple research papers on Cornell University's academic publication. He's a contributor to the Ethereum codebase, and he's led development teams at several other public blockchain projects. Andre, can you tell us how we evaluate the technology component of crypto projects?
So the technology actually tells us a lot more than just what's happening in the tech. To use an example, so you've decided you like this project, you've looked at the website, maybe you've read the white paper, but it probably really didn't make sense. You've looked at the team portfolio, you like what their skill set is and their previous experiences. How do you assess from there? Are they the right team to do it? Are they capable to do it? Is what they're promising feasible? And is this the team to implement what they said they're going to implement? The beauty of our industry is it's a very open source culture. So we always have normally the preceding white paper, which is a lot of theoretical detail in how something's going to be implemented. And then we have the code base, which is an open source, what is actively happening and being built. So the first thing we start with is we start on the white paper side, because this is the theoretical details of what's going to happen. So using an example of a new blockchain that provides scalability solutions via a proof of stake solution. So by diving through the white paper, we can see how is this team planning on accomplishing this? What is it that they are trying to build? How will the staking work? How will the validators work? How will this provide security? What are the potential attack vectors that might happen from here? So now already from reading the white paper, you can very quickly find out what kind of team this is. So a white paper with a lot of marketing verbiage is very quickly a way to see that this is most likely not a very technical team. White paper that is extremely academic and theoretical, you can see you're most likely dealing with researchers and they might not be the best engineers. So ideally you want a mix between the theoretical academic and the engineering, which gives you the best output. So here already we can very quickly begin to see what's the feasibility of this product and where is the team sitting in terms of it. So assuming that the original spot check makes sense and the idea makes sense and what they want to implement makes sense, we can start going a little bit deeper and we can start looking at the actual theoreticals. Is how they're proposing to build it, does that make sense? Is what they want to build feasible and will it make the difference they think it will? Because in a lot of cases, what they're proposing and what the actual outcome is can also be vastly different from each of the different 2 outcomes. So assuming that, again, we've gone through the paper and we've done our deep dive and we're happy with the detail we've seen, then we can move on to the actual GitHub or code base, as long as it is open source. So moving over to the code base, before even actually diving through the detail, you can already see a lot of information. So how many contributors are in the project? This is the maintainers and the people who are actively working and developing. Is it one person, in which case there's maybe a risk, or there might not be a full over procedure, or is it a group of people, which means that it could be easier to add more dependents and other people into the project. You can see, is there good branch management? In other words, are they using good styles to be able to maintain different batches of code that they're implementing and adding different patches. You can see how often do they commit. Is this maybe a hobby project? Is this something they work on daily? Is it a full-time project? So we haven't even touched any of the code yet. We've just been looking at GitHub metrics, and already it has given us a lot of information in terms of the team. The next thing we can look at is the language. So the language that it is being developed in is a strong indicator of the team's skill set. So if the team we looked at earlier has a lot of JavaScript skills and the code base is in Golang, then that can already raise some discrepancies because the team aren't leveraging their expertise. I'd expect to see a JavaScript code base for a JavaScript team. So these are already quick things that show you, is the team correctly lined up for what they're building? And we've already tested the theoretical. Now we can start actually going into the code. So now we can start looking at the architecture, and we can look at, is the scaffolding or the architecture that they're putting in place in line with what they promised in the white paper. Here very often you'll see forked projects which they might be trying to attempt to change something, but because they're doing that, they're not familiar enough with the code base, and then it shows that they can't really accomplish what they did in the white paper. Or you can quickly see they might not be able to implement the theoreticals, and then you'll notice on the engineering side that you don't see it coming through in the code. So the code very quickly tells you exactly what they're building in terms of what they promised in the white paper. So assuming that that is good, even though it might be premature in terms of development life cycle, the next thing you can look at is, where is it in that life cycle? Is it POC? Is it MVP? Is it a production-based system? Now, using this, you can line it up to their roadmap. You can, with a few checks, fastly assess, are they ahead of schedule? Are they behind schedule? Will they be hitting their next milestone? How quickly are they developing? What is their development capacity? And this allows you to line it up to their roadmap items, their milestone items, and see, will they be making their deliverables? Because deliverables have a good community and product impact. So now we're able to assess the team's capacity, we're able to assess the life cycle, and we're able to assess the roadmap just from having these artifacts that are available openly if you know how to read them. The last thing we can check is the caliber of code quality. This is things like documentation, variable standards, code quality, and these things show you how easy it is to bring in other developers into the project, or the amount of detail and thought that's going into the level of the product. So now, just by having used these two artifacts, we can say more about the team and their capabilities and their roadmap than anything you would have had from a 10-hour call if you had been online with the team.
Okay, so far we've talked about how we think about crypto investments, our core strategy, and 2 out of the 7 tenets of our evaluation framework: the market opportunity and the technology. In the next section, we'll go through the remaining 5 tenets of our evaluation framework: the ecosystem, the team, the token economics, the token performance, and the roadmap. Only after pulling all of these pieces together will we be able to establish a cohesive investment story. I look forward to seeing you in the next section.